The second round of the Paycheck Protection Program loan. So we're going to go through the second round for the second draw of the PPP program. There's the interim final ruling, which outlines what you need to do to qualify and apply for the second round. So there's a 42-page document from the Treasury. I'm going to go through it, break it down so you know exactly what you need to do to prepare, because you can start applying for that second draw right now, depending on if your lender already has the application set up. But before we get into it, if this is your first time at our channel or you haven't subscribed, click on the subscribe button at the bottom. My name is Travis Sickle, Certified Financial Planner, helping you reach your financial goals. All right, like always, I'm going to pull it up on the screen and we can go through it together, and I'll help break down exactly what you need to do. It's not that bad. It's pretty easy to go through, but let's get you set up and ready for that second draw. So here is the Treasury's website where we're going to get the interim final ruling, and I'll leave a link in the description at the bottom. And I'll scroll down right here. It's right here. This is the PDF that I'm looking at, the interim final ruling on the second draw PPP loans. And I've already gone through it, bring it up here with the highlights. So this is the interim final rule, announces the implementation of Section 311 of the Economic Aid to Hard-Hit Small Businesses, Nonprofits, and Venues Act. This is the Economic Aid Act. So let's go ahead and scroll down a little bit. I'm going to go through these highlights and break it down for you. So this applies to loan applications and applications for loan forgiveness. So let's go down a little bit further. Now, this second draw PPP loans are intended to provide expeditious relief to America's small businesses. Now, the key differences. Now, this is what's different. So the first draw PPP loan to the second draw are described in this interim final ruling, which explains the loan terms, eligibility requirements, and application process for the second draw PPP loans. So right down here, we're going to have the eligibility requirements, and probably why you're watching this video, to see if you qualify and how to qualify. So the eligibility requirements for the second draw are a little bit narrower than the eligibility requirements for the first draw. What does it mean? So 300 or fewer employees on the second draw, and a revenue reduction from 2020 relative to 2019. So there are two ways for that reduction to occur. First, it's the entire year of 2019 compared to 2020, or any quarter in 2019 to that same quarter in 2020. So January, February, March of 2020 or 2019 compared to January, February, March of 2020. So the same quarter in 2019 has to have a revenue reduction into 2020. So that is a requirement. You can use any of the quarters from 2019, match them up with the identical quarter in 2020, or you can use the entire year. Now, you have to also, right here it says, has received a first draw PPP loan and has used or will use the full amount of the PPP on the first draw on or before the expected date on which the second draw PPP loan is dispersed to the borrower. So you have to have used the first draw on the approved expenses, payroll, or all the other miscellaneous, I'm going to call it, overhead expenses that you could have used for utilities and everything else that they outlined for the 40%. So 60% for the payroll, 40% for the overhead expenses. And it can be 100% for payroll. That's perfectly fine. Those are approved expenses. So if you did 100% for payroll, that's okay too. You just have to make sure all of the money was used and it was used for approved expenses. It can't be sitting in the bank or used for things that are not approved expenses. So the next section says the borrower must have spent, we just read that, spent the full amount of the first draw before they can get the second one. And it has to have been 25% from 2020 to 2019. From 2020 to 2019, we already did that as well. And then we're going to go down further. Here's the quarter, corresponding quarter. We already went over that. And then we have in all 4 quarters of 2019, we already went through that. The methodology will be particularly important for small borrowers that may not have quarterly revenue information readily available. Don't need that. We already went through that. May still meet the revenue reduction requirement under one of the quarters. We already went over that. That's going to be the big one. So what is the gross? So here we go with the law, I guess you will. What is described in gross receipts. And I'm going to put this link in the description as well. Let's pull it up here. So we have it right here. How does the SBA calculate annual receipts? So receipts means all revenue in whatever form. This is basically any income that you're going to have minus any returns. So it's generally receipts are considered total income plus cost of goods sold, as these terms are defined and reported on in IRS tax return forms. So this is really just everything that is coming in as far as your revenue. Now, I know this isn't going to be great for every single small businesses. And right here, I want to point this out. Reduced by returns and allowances. So if you have returns, you can subtract that from your receipts, but it really is your receipts. It's your income that is coming in. It's not your net. So I shouldn't say income. It's your gross income. It's what's coming in. And that is really important. So unfortunately, for some small businesses that are selling multiple goods or multiple services, and one has a higher margin than another, if you're selling something or providing a service for something that has lower margins, they're not really worried or considering or taking into account how much you're actually making. They're only looking at the revenue number coming in. So some businesses might actually be hurt by this and might not qualify for that 25% reduction because all of a sudden they're selling a lower margin item or a lower margin service and unfortunately not making as much money, but might not meet that 25% reduction in total receipts. So again, I'm going to put this link in the description at the bottom if you want to read it yourself to get a little granular, especially if you're really close to that 25% reduction. You want to make sure you get that. So that is what the definition is for receipts. And then this definition will enhance the administrability of second draw PPP loans because it is a definition already used by the administration and many small businesses. So this really shouldn't be that difficult. If you're running QuickBooks, you're just going to look at your income, your gross income minus any returns. Basically, that's what it's going to be. Let's scroll down to the next section. And then here we have the payroll cost calculation. Now, this is pretty straightforward, and it is going to be identical to the first draw, except the fact that you could use 2020 if it is higher. And if you are a certain business, I know the restaurants meet this requirement, but if you have an NAICS code beginning with 72. Now, I don't deal with NAICS codes, but if you have one that begins with 72, you can actually get a little bit more money rather than 2.5. It is 3.5 times your average monthly payroll costs. So I know the restaurants fall under this category, but if you do, then you could get a little bit more from the second draw. And then right here, we're going to scroll down a little bit further. The second draw PPP loan application and documentation requirements. Now, this is a little bit easier, in my opinion, for most businesses because there's no additional documentation to substantiate payroll costs will be required if the applicant uses calendar year 2019 figures to determine their first draw loan and use the calendar year 2019 figures to determine their second PPP loan amount. So if you're using the same math that you did in the first round, that's what this is referring to. And if you're using the quarter over quarter, that's still fine too. And then the lender of the applicant's second draw loan is the same. And the reason they're doing this is so they have the same documentation because you're already going through them to get the forgiveness. And then right here it says the additional documentation is not required because the lender already has the relevant documentation. That's why I put it in a separate color, just so you know why. Go to the same, if you're using the same lender, I'm not making a recommendation. If you're going to the same lender, then they already have the documentation, so you don't need to be redundant on it. And that's what they're trying to do. They're trying to make this a little bit easier just to get the loans out and ready to go. And for loans with a principal amount greater than $150,000, the applicant must also submit documentation adequate to establish that the applicant experienced a revenue reduction of 25% or greater in 2020 relative to 2019. So you have to submit that documentation if it's $150,000 or amounts greater than $150,000. But if it's under that, you can do it at time of loan forgiveness. And that's what this says down here. It says for loans with principal amounts of $150,000 or less, such documentation is not required at the time the borrower submits its application for a loan, but must be submitted on or before the date the borrower applies for loan forgiveness. So do your math, put it aside, have that documentation ready. So when you do the second round forgiveness, you're ready to go and you have the documentation because you're going to need to submit it as required under the Economic Aid Act. And I believe that is the last bit that we're going to go through. So there's a lot of other details of other areas like lender requirements, which I'm not going to go through in this video, but in a nutshell, it's pretty easy. So I have it written right here. So we're saying 300 or fewer employees, 2020 reduction relative to 2019, either on the annual basis or the quarter matching the quarter. And on the second draw, you have received the first, you've used all of the money, and a 25% reduction in revenue. So that's going to help some businesses. It's going to hurt others, unfortunately. I guess that's just the way it is. If you have questions on any of this information, let me know in the comments down below. And if there's something that I missed, go ahead and point it out so I can do it on future videos as well. And of course, as always, if you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.